remind you that during the course of this conference call, the company will be making express or implied forward-looking statements within the meaning of the Private Securities Litigation Act of 1995 and other U.S. federal securities laws. Words such as estimates, expects, intends, plans, believes, and terms of similar substance used in connection with any discussion of future operational performance or financial results identify forward-looking statements. Such statements are subject to risks and uncertainties that could cause the actual results to differ materially from these statements. The forward-looking statements made during this presentation speak only as of today's date. The company expressly disclaims any obligation or undertaking to release publicly any updates or revisions to any forward-looking statements to reflect any change in the company's expectations with regard thereto or to reflect any change in events, conditions, or circumstances on which any such forward-looking statement is based, in whole or in part. These statements do not constitute or form any part of any offer or invitation to sell or any solicitation of any offer to purchase or subscribe for any shares in Hadasit-Bio Holdings Limited or any of its affiliated entities, nor shall it form the basis of or be relied on in connection with any contract therefore. Additional information on the company, including financial statements, can be found at www.hbl.co.il. With that, I will hand the microphone to Mr. Ophir Shah for the presentation. Ophir?
Thank you, Josh. Thank you, ladies and gentlemen, for joining us today for this webinar by Hadasit-Bio Holdings. It's a pleasure, it's an honor for me to address you all and to share with you some of the news, some of the expectations we have for the upcoming period at Hadasit-Bio Holdings. I assume you all see slide number 1, and with that, we will dive in. Please make a list of your Q&A, and I'd be happy to address all your questions. Once we're done, I will then deliver a closing statement. So let's begin. We're going through the forward-looking statement slide. Josh has already given us that. We don't need that because we've already been through that. Let's go into slide number 3. This really is a snapshot detailing who we are and how we are structured. We were set up as a spin-off from the Hadassah Hospital. Hadassah is Israel's third largest hospital. I'm sorry, we're on slide number 3. As I said, Hadassah is Israel's third largest hospital. It has the largest portion of R&D within all of Israeli hospitals. More than half of the R&D in all Israeli hospitals, and there are 18 of those, takes place in this one hospital. As such, it creates a steady and high-quality deal flow and stream of opportunities for us to invest. We were set up exactly for that matter, to invest and allow the public to participate in these very, very attractive and innovative opportunities. We were set up in 2005 and started trading on the stock exchange in Tel Aviv shortly thereafter in 2006. In 2011, we took another step forward and were registered as an ADR, an American Depository Receipt, here on the OTC market, and we've been trading here ever since. Right now, we are the only public, financially independent investment arm within Hadassah, so that any and all opportunities come to us. We're looking at these, and we want to increase our portfolio that currently contains 6 companies, and we want to grow it and add more companies to what we have done so far. All in all, since the IPO, we've raised close to $25 million from the public markets and from partners. We also have a large grant basis from the Israeli government. I would say anywhere between $10 and $12 million of soft, non-dilutive funding have been added to that original amount, and obviously most of that money has flowed into these 6 companies, bringing them to where we are, and by that I mean an advanced, clinically stable, strategically partnered portfolio, and obviously we'll go into the underlying assets in just a few slides. The recent round of financing was in September this year. We completed a $1.5 million funding on the Tel Aviv market. These are not easy times on the Tel Aviv market, but still we completed this easily with a participation level of 99.5%, showing us that our current shareholders fully support and believe in the story. Of the 6 companies, we expect some major developments and some major news over 2013, and we are very bullish towards the upcoming period. Just a few words about Hadassah and its structure. Hadassah has been owned and is operated by a non-for-profit organization based here in New York, the Hadassah Women's Organization, and they have set up these 2 hospitals close to a century ago. These are 2 of the leading hospitals in Israel, based in Jerusalem, about 6,000 employees, 1,200 beds, and 1,000 physicians, MDs and PhDs, some of whom are very, very innovative and aggressive. And obviously we, as the businessmen in charge of commercializing the IP, the intellectual property coming out of the hospital, are very, very happy with that. The hospital garners more than half, as I said, of all the R&D in Israel. It generates over 20 new patent families every year, and it has a list of about 20 companies that have been started, some of which have been taken public based on that IP. The structure slide is very simple and straightforward. You can see Hadassah owns a private company by the name of Hadasit, and we were spun out of Hadasit, as I said, in 2006, with the most promising and advanced companies in that universe. We had 8 companies on the get-go. We now have 6 companies, and that's pretty natural selection in our industry. We're happy to have these 6 and happy where they are right now. You can see the equity levels being extremely or relatively high, I should say, compared to our industry. Usually VCs or incubators are satisfied with a 10 or maybe 20% in average on each one of their companies. We have a much stronger influence. We sit on all the boards, we chair some of the companies, and we're very active in driving them on a hands-on basis. All of the portfolio companies have demonstrated proof of concept in an animal model when we inserted them into the portfolio. Our key task is to move these companies forward into clinical trials and advance them as aggressively and as effectively as possible. We want to and we need to generate clinical data in order to partner out. It's perfectly clear to us that small companies based in Israel cannot bring a drug to the market on their own accord, and they need to attract the attention of large multinational partners. And we've done that already with 5 of the companies, and I'll go into the names and details in just a couple of minutes. Setting aside the current portfolio, we also have access to a very large pipeline of IP coming down from Hadassah and from non-Hadassah sources, by the way. A lot of people are coming to the hospital for consultations, for R&D, for GMP manufacturing, for animal studies, for clinical research, and we can ride that wave of entrepreneurship coming into Hadassah by investing in those companies. As I said, we're traded on both exchanges, and our market cap, which is currently below 10 million, is a far, far cry away from the net asset value, meaning what we should be trading at based on the last valuations of our portfolio companies, and we'll go into numbers pretty soon. The next slide shows us a list of the positive news releases we put out on the market over the past year. We're obligated to do that in English here and in Hebrew, obviously in Tel Aviv, as we're traded in both sites. And you can see a steady stream of positive developments coming out. The next slide talks about the strategy, and I like this slide. It's very intuitive. We call it I to the third. I have to admit this is a risky business, and having one piece of the puzzle, i.e. the innovation alone or the infrastructure alone, obviously is not enough. But by having all 3 elements, innovation on the left, infrastructure on the right, and the investments in the middle, we can mitigate that risk, and we can make sure that the science is wrapped up in all the other elements it should have in order to move drugs towards marketing phases. So we have the innovation stemming out of the hospital, out of the teaching faculties, out of the patent families we see. On the other hand, we have the infrastructure, as I said, manufacturing, animal studies, clinical research labs, capital expenditure equipment, all of that is in place. We fuel those 2 arms by bringing in the investments from the public and the private market, as we've been doing over the past 5 years. And as I said, over $25 million have been raised. Just as an aside, we have a study showing us that if we were to do the same effort or bring these companies to the same point where they are now, if we were to do that in a different market, namely the U.S. market, it would have cost 5 or 6-fold more than what it actually has. Now, with your permission, we'll go to the second level of the presentation and talk about the underlying assets, namely the companies themselves. So slide number 10 shows us the market size, and these are all large and impressive numbers, and that may be true, or it is true, but we tend to focus on unmet needs within these markets. We're trying to look for the diseases where there is no effective cure or where there are significant side effects with the standard of care right now. It's very hard to compete in these massive markets with the really, really big players. So we're looking for places where we will have an easier point of entry. You can see the stage of the companies in slide number 11. You can see 2 companies in the clinic and another 3 slated to enter clinical trials over the next 6 to 9 months, namely 2013. So again, this is another source for positive developments over the upcoming year. Portfolio company number 1, CellCure. CellCure is based on Hadassah's expertise in stem cells. They know how to differentiate and multiply cells and cause them to turn into RPE cells, meaning retinal pigmented epithelium. These are the exact type of cells that go dysfunctional during AMD. AMD is the leading cause of blindness in the world today, and these cells can be inserted into the eye, replace the dying cells, and basically restore eyesight, which is a scientific breakthrough. And Livex, next slide, are working on graft versus host disease, which is a complication of bone marrow transplant, a fatal disease with no cure today. It's a large market. These guys have completed a clinical trial now showing their technology, which is based on cell therapy, is highly effective and completely safe. They had no adverse effects, and they managed to eradicate GVHD in a very high percentage of the trial. So there is definitely statistical significance in the result of that trial. They are now raising money and preparing for a phase 2B later this year. BioMar Care is doing early stage cancer detection with a series of blood-based and serum-based markers that they have. These are markers that typically light up, so to speak, when they are in presence of cancerous cells in the blood, thus giving earlier detection rates, higher specificity, higher sensitivity, and sending the right people to the right exams, i.e. mammography or colonoscopy in time and not waiting till it's too late. They just raised $1 million from a partner in Israel. They have a grant from the Israeli and the U.S. government, and they're looking to raise more money soon in order to complete clinical trials. CAR is working on a biological platform that has a very unique way of fusing, of connecting 2 therapeutic proteins together, leaving 2 functional sides and allowing both proteins to work together on 2 systems within the human body and not have one cancel the other out. They attracted the attention of Sanofi, one of the largest drug companies in the world, the 5th largest to be exact, with a $30 billion revenue every year, and that massive company invested $2 million and then another $500,000 in this company. They raised $2 other million from a Swedish company this year, and they're slated to start clinical trials before the end of 2013. ProTab is working on a very unique antibody structured in a very innovative way, strengthening the immune system, the IL-10 factor of the immune system, and targeted at RA and IBD, 2 immune system diseases, rheumatoid arthritis and inflammatory bowel disease. These are diseases that have non-effective cures out there on the market, and the market is hungry for innovation. We raised money from 2 of the larger Israeli investors, Cloud Biotech and Pontifax, and we're preparing for a clinical trial in Q3 of 2013. Last but not least, definitely not least, DPharm. DPharm is a publicly traded company. Unlike the other companies, they have acquired one of our companies by the name of Thrombotech, and they have put their product in the lead of their pipeline. So you can see THR19, the product aiming for stroke. That is the product they have acquired from us. We got a big bundle of shares in this public company. So for us, this was a definite exit, and we're happy that our product now has more access to capital, more infrastructure, more employees, and more labs. I'm especially proud of slide number 18. It shows really a list of our current partners and collaborators in these 6 companies. So you can see some of the big names like Teva and Sanofi, some specialty companies like Biotime and Micromedic, and some financial players like Pontifax and Cloud Biotech. And these companies have put up altogether a lot of money into our companies, thus validating the science and the potential in our portfolio. We are a lean company. We have 4 employees on the HQ level, including myself. Within the group, we have another 50 employees, 30 of which are full-time, 20 are close to full-time. We have about 18 months to 2 years of cash in the bank on a very, very low burn rate, meaning that the investments you make have an extra bang for the buck and go directly into R&D for our 6 companies. And as I said, we're looking to increase the portfolio size from 6 upwards. We have discussed the net asset value table, and the bottom line of it, and I won't go into too much detail, is that it is currently 3 times higher than the market cap we're attributed with on the Tel Aviv exchange. We've taken our shares in the recent financing of these companies. We've added cash on hand, and you can see for yourself that there is a massive, massive gap between the net asset value and the market cap on the Tel Aviv exchange right now, which is about 10 million US, give or take. Slide number 21 has a very systematic way of approaching a biotech investment. Small or large, risky or risk-averse investors look for the same things in a biotech investment. They want to see diversification, and thus we are following a portfolio. They want to see solid science, and we have that stemming out of Hadassah. They want to see state-of-the-art infrastructure, and we get that because we are based on campus. Management is in place, proven and experienced management. There is a high return potential by addressing blockbuster markets. We are traded on the ADR, so it's very, very easy to hold, buy, and sell, and the future potential is built in with the deal flow coming out of Hadassah. I hope that you've seen that. That was slide number 21. I hope there's no problem with the slides. And I'm moving on to slide number 22, which is the summary slide. We'll then open the floor for some Q&A. So as I said, this is not a one-time shot on one goal. This is a multiple shot story. We have 6 leading companies, each of whom is highly successful. We have clinical results, and we have strategic partners in place backing up these companies. We have access to a large pipeline of innovation, so we can grow the portfolio based on our financial capabilities and obviously the attractiveness of the pipeline. All companies show major progress since we moved in, 3 of which are already in clinical trials. We utilize to the best of our abilities the Hadassah infrastructure. We have a clear exit strategy so that when we generate enough clinical data, we can hook up with strategic investors, and we generate a consistent stream of relevant news, so the price appreciation should follow that closely. And again, last but not least, the current valuation, the low market cap we have on the Tel Aviv market, I think creates a very attractive opportunity for any investor. With that, I'd like to thank you all for your time, your attention, your support, and I will open the floor if there are any questions, please.
Thank you, Ophir. We will now poll the audience for questions. As a reminder, if you are listening in via webcast, please type your question in the chat text box on your screen. If you have audio capabilities, please hit the raise your hand button, and we will open your line for your question. Please hold while we poll for questions.
Shall I read that out?
Our first question comes from Sylvia Dow. The question is, do you have a scientific advisory board that helps select the portfolio companies and guides strategy?
Thank you, Sylvia, for that question. The answer is absolutely yes. Since we're based in the hospital, we almost have a full-time advisory board comprised of the department heads in the hospital. That is obviously not enough, so we additionally added some industry experts from well-established pharma companies, Teva and others, and some VC experts based in Israel. And every time we get an opportunity, we ad hoc structure the board and bring in the right people and review that opportunity. I hope that answers your question.
Thank you, Sylvia. As a reminder, if you're listening in via webcast, please type your question in the chat text box on your screen. And if you have audio capabilities, feel free to hit the raise your hand button, and we will open your line for your question. Please hold while we poll for additional questions. Our next question. Our next question comes from Greg Greenberg. Can you shed some more light on what's unique about CellCure?
Thank you, Greg. I'd be happy to do that. We're very proud of CellCure. CellCure is actually based on some very unique raw materials, so to speak, that Hadassah had. I'm sure you've all heard of the field of human embryonic stem cells. Israel has been very fortunate to enjoy a very liberal approach to this field. And while research here was held on a very low flame due to a host of reasons we definitely won't go into right now, Israel has made leaps and bounds on that front. Hadassah has 12 of the most clean and pure lines of these human embryonic stem cells harvested from IVF embryos. And what CellCure has is basically the technology and the ability to cause those cells to differentiate and multiply. I'm sure you know that human embryonic stem cells are omnipotent. And theoretically speaking, they could turn into bone cells or nerve cells or muscle cells or blood cells. The idea or the wisdom really lies within the ability to make the cells grow and multiply into the exact cells you want in a very controlled manner, not allowing growth of any tumors or foreign types of cells in the cell culture you're creating. CellCure has exactly that. They have a way to grow the cells on a very high level of purity, on a very high yield, creating large masses of cells, and without using any animal-derived product. That means xeno-free environment. And this is something which is very important to any regulatory agency today. And they're aiming that technology at the field of eye disease, namely age-related macular degeneration, which is a massive market with no effective cure today. Lucentis, which is the industry standard, typically slows down the disease progression, but does not reverse it and definitely does not stop it. Imagine if you could create the exact type of cells that are being destroyed as part of AMD and inject them into the eye and stop the disease and restore eyesight. That exactly is what CellCure is trying to do. And by garnering the support of Biotime, which is a large stem cell company here, and the support of Teva, which really needs no introduction, I think they're on the right way towards commercializing this drug. So thank you for that.
Our next question, will your presentation be available for download for those who cannot write as fast as you speak?
Well, first, I apologize for speaking too fast. I've heard that before, and I'm aware of that shortcoming. I will definitely be happy to send this presentation. It is non-confidential. We can put it up on our website, or you can please address me at the email address, which is at the bottom of your screen right now. That's ophir@hbl.co.il. And I promise to send the presentation back.
At this time, there are no further questions. I will turn the call over back to Mr. Shahab for his closing remarks.
Thank you, Josh. Thank you, ladies and gentlemen, for joining us today. I have to be frank with you. This is one of the first webinars that I have conducted, and I am impressed with the power of this tool. I feel as though you're here with me in the room. I think that HBL is a very, very unique story. We are part of a leading research institution on one hand, but we are open to public investment on the other hand, and that is something that is very rarely found. We think we have selected 6 very promising companies. We want to make them grow as soon as possible, as aggressively as possible, and we want to increase that portfolio. We appreciate your support and your help, and we're sure to be looking at a very, very promising 2013. So thank you again for joining us today.
That concludes Hadasit-Bio Holdings' webinar for today. Thank you for your participation. You may go ahead and disconnect.